Welcome back to the technical analysis video for the CFO Swinger Watch newsletter, and this is for the week of February 5th through 9th. Now before I begin, I want to thank everyone who wished me well for my sickness that I am currently still kind of have, and for my birthday as well. So again, thank you guys from the bottom of my heart for taking the time out of your day to send me all those amazing messages. With that, let's start off with the markets. So the S&P 500 on the weekly time frame, as you guys see on your own screen, I am still expecting to see a possible retest of 460, and once that occurs, we can possibly see some sort of a consolidation as the price dips below this 460 level and consolidates in between a wide price range between 451.50 to 460. Now, of course, to some, that may seem like a very tight price range, but for me, it's a very nice, large price range. But whatever you guys want to think, it is a good price range to be looking at if the price decides to pull back from the current highs and comes back below 460 and decides to move sideways. Now, let's track back just a little bit. So in order for us to move back down to 460, what do we need? Well, the first thing that really caught my eye is this weekly volume from last week. Now, if you guys already forgot, let me remind you, last week was a week of catalysts, right? We had a bunch of binary events like the first FOMC meeting and earnings, especially earnings, which are the major and main binary events on the stock market. So, we saw a bunch of FOMO buying that came in the last half of last week. Now, this weekly jump in the volume can either mean, again, number one, FOMO buying from all the buyers that were sitting on the sidelines. I gave you guys a complete, deep explanation in the market summary in the newsletter. So again, make sure you guys read the newsletter first before you guys are watching this technical analysis video. Now, second, this could potentially be a blow off the top volume, right? Where sellers are positioning into short positions to go against this current market uptrend. And personally for me, I am most likely thinking it's the latter out of those two potential situations. And so with SPY here and the overall market always acting as a dichotomy, right? Always with two different sides. At this point, from a probability standpoint, we are most likely going for that second situation where we will see a blow off the top move sometime this week or next week, or possibly when we're heading into the February FOMC, which I will also go more into depth later on this week in the Discord community. But for now, I want you guys to have a longer term thinking all the way up into the end of this first quarter of this year that we'll most likely see a reversal to the downside. Now, how far can this reversal go? Right. So from a percentage standpoint, we like to tend to think that a quote-unquote textbook correction ranges from 5% minimum to a 10% maximum. So based on what I've just told you guys for these levels on SPY, this 460 level specifically. Okay, so if you go from the closing price of last week all the way down to 460, that's going to be about a 7% move to the downside from the current closed number. And if you go all the way down to that 451.50, that will lead us to around negative 8.50%, right, from the current highs. So that kind of really falls into range of that 5% to 10% textbook correction. Now, can we have a 10% maximum correction? Of course. But based on the technical analysis here and based on our demand area that we're currently seeing between 460 to 451.50, there's a chance that we can be seeing just a 7 to 8.5% correction from the current highs. Now, obviously, that percentage can change as the markets continue to move this week. But keep this in mind. Keep those numbers, those values in mind. And most importantly, keep this 460 whole number level in mind. So with that being said, on the daily time frame, things are becoming quite overextended. Okay, so not the TTM squeeze here is not what I wanted to see, but the RSI. So the relative strength index is currently showing a bearish divergence. All right, so what we're seeing right now in the RSI is lower highs and lower lows. But if you take a look at the overall market trend, what are we doing? We are seeing a textbook uptrend with higher highs and higher lows, which is completely opposite to what the RSI is doing, lower highs and lower lows. So at some point, we should be seeing a larger move to the downside that will confirm this hidden bearish RSI divergence. I believe I didn't say hidden the very first time, but this is what we call a hidden RSI divergence, right? Hidden bearish RSI divergence is the full name, but you guys get my gist. So as long as you guys understand that we're seeing lower lows and lower highs in the RSI with higher highs and higher lows in the overall market, you guys should be seeing what I am seeing. Okay, so again, potentially this week we can see a first retest, or actually not a retest, for a first touch of that $500 whole number level before we see that official large move down. All right, and it looks like the market has been gunning for that $500 number, or even on SPX, that 5000 number. All right, 5000, 5,000 number here. So again, the SPY, SPX, they're both saying the same thing, like the hidden bearish RSI divergence. All right, so with that in mind, that longer term, I would say mid to longer term perspective as we head into the middle of quarter one, let's take a look at our first name for this week. Now, if you guys have read the newsletter first, you guys should understand why our watch lists will be very short and concise for the rest of this month. So first of all, we have FCX. Okay, so FCX is a very, very popular and very liquid copper name. And the reason why we're looking at this name is that on the weekly time frame, we're seeing a very, very large macro wedge. Right, this is a very, very good looking wedge. And if I just take away all my technical analysis here, right, you can still very much clearly see and observe this wedge without even having the trend lines. So this wedge here spans over a year, right? So this wedge began late February to around early March, but I would say it has reached that yearly status of this huge macro chart pattern, this wedge chart pattern, and this usually tells me that we're about to see some sort of a very, very large breakout. And if you guys remember, a wedge chart pattern is neutral. Okay, it means that the chart pattern can facilitate a bearish or bullish breakout. And the most important thing for you guys to understand is that the price will continue to consolidate in between these two trend lines that make up that macro wedge chart pattern. So again, it's important to understand that if you guys are looking to trade a name like this where it's conforming to these very large and higher time frame trend lines, it's important to understand that you will most likely profit if you guys are looking to range trade this name rather than trying to day trade it or trying to hold it for the longer term, because we do not know what will happen at the exact point of breakout, because it could either be a breakout to the upside or to the downside. But again, you can avoid those risks by having a very, very good and logical stop loss from whatever your entry point was. So with all that in mind, okay, with all those ideas in your mind, let's take a look at the daily time frame. So what we're going for is a bullish breakout to the upside. Now, I gave you guys all my reasons in the market summary as well, including on this specific name as well in that technical analysis section. So make sure you guys read that first. So FCX has been consolidating very, very tightly for about a week and a half. And so far, we have been staying right on top of this daily 50 SMA. And I love the fact that we've been really, literally just been moving sideways for the last week and a half here. And as we're doing that, we have allowed the daily 21 SMA, this light blue line, to catch up. And what I'm expecting, my short-term SMAs, my 10 and my 21 specifically, okay, the 10 is my red line, is that the 10 will eventually curl up higher and cross over the daily 21 SMA. That is what we call a bullish crossover. And on the daily 21 SMA so far, we're seeing this one slowly curling down. And that's exactly what we want to see if we were to see a bullish breakout, because during a textbook uptrend, we see the 10 closely following the price, and right behind it, we see the daily 21 trailing closely behind the 10. And a great example is this right over here. So the price bounced off of this macro ascending support trend line, which again, this makes up that overall macro wedge chart pattern. And we saw a very nice uptrend for a couple of weeks, right? So for most of November and into the first half of December here. And the daily 10 SMA closely followed the candlesticks or the price, while the daily 21 trailed close behind the daily 10. And that's exactly what I want to see, where the 10 continues to move lower until the daily 10 crosses over the daily 21 SMA. And that will only happen if the price decides to break to the upside. And so for tomorrow, or for the rest of the week, this new trading week, or the first full trading week of this month, if we decide to move sideways again, right, we can potentially see another retest of this $39 daily support level. So that is where we can have a very early but riskier entry point at $39.10. But if you guys want to avoid any type of whipsaw price action, which is what we've been seeing on FCX, and that's exactly why I got stopped out on FCX last week, we can look for a more confirmed entry point over $41.10. And the reason why I have chosen 41.10 is that 2 weeks ago, that the weekly high on this specific weekly candlesticks from 2 weeks ago was at 40.99. So if we're able to break over this previous week's high, okay, or this 2 weeks ago highs, we should be able to see a very nice move upward as we start to see more buyers coming in to confirm this potential move to the upside. And so if we're able to break over $41, that will be our official confirmed entry point. And again, you guys can see that that 40.99 number right at this highs of this daily candlestick. So right after the earnings day report here, right? So earnings report, excuse me. So again, for FCX, if we're able to break over 41, right, we should continue to move to the upside until we see a retest of this descending resistance trend line, which again, as a reminder, makes up that overall macro wedge chart pattern that I've shown you guys on the weekly time frame. Now, the price will obviously be magnetized by this trend line, but most importantly, I will want the price to head right back to the specific level at 42.90, or again, if you want to simplify things, round up, $43, the whole number level of $43. So obviously, if you want to see that retest of 43, we will have to break out from this descending resistance trend line. Now, from this point forward, this is going to be all future speculation, but if you are able to break over this descending resistance trend line, or basically over the macro wedge chart pattern on the weekly time frame or even on the monthly, so any of the higher time frames, I want the price to retest 43 and come back down to retest this descending resistance trend line and turn it into a new level or area of support. So what I want to see is basically the price using this previous or old descending resistance trend line and turn it into a new descending support trend line. And from that point forward, we can see a nice potential tight bull flag on the daily time frame, maybe even just a micro bull flag where we consolidate for about 2 to 3 trading days before we see another breakout over 43 and we start heading towards my price targets of 45 to 46. Okay, now as I've written already in the newsletter, I have an ideal kind of a far-fetched target range between 50 to around 52. So that's kind of the ideal dream that I have for this name, but overall I'm gonna keep it realistic. So if you're able to break over 43 at some point, I would want to see 45 and 46 being hit. Right? And our second to last name here is TPR. So I am going to continue to keep this name for this entire week and possibly even next week as well, because TPR has been acting very, very strongly. And well, based on last week's price action, it clearly indicated that this name has the RS, the relative strength. It was completely unaffected by every single market catalyst. Right? It wasn't even slightly affected by the FOMC results and rate decision and Jerome Powell's comments. And in fact, on that day, it only moved about 0.67 cents to the downside. Right? So as long as this name continues to ride its daily 10, okay, this red line here as a reminder, and the daily 21 SMA, we are good. Now, okay, one thing that we can't forget is that the weekly here, guys, remember the weekly is overextended. Right? We're starting to see some sort of an overextension, especially as we're starting to see the volume kind of taper off and starting to move to the downside. We're starting to see the volume bars slowly decreasing in size, which means the bullish buying momentum is slowly weaning off. And especially the average volume, right? The weekly average volume line here is also decreasing. So that is also a cautionary warning sign for the future if you guys are looking to start an equity position in this name. Now again, as a reminder, okay, there's a lot of reminders for this name, right? A lot of reminders. We're going to focus on equity and actual shares on this name because, well, options doesn't seem to be too attractive here, right? It's not as liquid as I want them to be, but TPR can definitely be played with options, but most importantly, using longer dated option contracts because this name can definitely provide some volatility as we've seen so far for the past couple of months of last year and even including this year. So for TPR, which is a relatively low volatile name, if we're able to see this name coming back down to the quote-unquote normal and average volatility, we should be able to find some sort of a good entry point for TPR. But for just the sake of this week, right, if you're able to find a very good entry point, I would say it's going to be over $40.20. Okay, so that will be your first official entry point for your equity position. Okay, so make sure you guys read the newsletter again. I have kept the initial analysis from last week, and I've also added my slight thoughts on what I think about this name going into this week and potentially for the next few weeks as well. So make sure you guys read that. Okay, so that's it for the equity names. I want to briefly go over, okay, our cryptocurrency pick, Bitcoin. It has been our major cryptocurrency pick for quite some time, and we have been absolutely on point for Bitcoin as well. So again, Bitcoin has had its run, right? You are going to be late buying into this top here. So far, it seems to be consolidating, but if you go a little deeper into the details, we have been slowly making lower highs and lower lows. So what I'm kind of expecting to see is a descending channel. So obviously a descending channel is inherently bullish, right? Hopefully you guys answered that very quickly in your head, right? But if you guys didn't, make sure you guys are studying your chart patterns. But Bitcoin, I'm expecting some sort of a move like this. So most likely we're going to be sticking to this $42,000 level. But most importantly, if we do decide to make this descending channel, we should be seeing at least a second retest to confirm this specific resistance trend line. And once we do see a rejection, we'll most likely head back down and create a second lower low pivot point by retesting this descending support trend line. Okay, and again, these two trend lines make up this overall potential descending channel. Now, I want this descending channel to form because we had that halving event on Bitcoin. I've really just gone into that already multiple times, so make sure you guys read the newsletter from this week and all the previous newsletters, right, from months ago. So again, Bitcoin, this is what I'm predicting here. For Bitcoin, I really want to see another second lower low because again, we got that lower low pivot point right here on January 23rd of this year. So if you're able to move below this low of this candlestick, which was at $38,505, okay, we should be seeing an official retest of that $38,000 whole number level, like I've been saying since last week and last week, so around 3 weeks ago. And if we're able to break below this level, which is a support level now, it's going to be a very, very hard level of support to break through. But if the sellers are very much present, we will see an official retest of this descending resistance trend line and officially see a nice large pivot. And if that occurs, then we will officially have that descending channel picture for us to observe. All right. So again, this is just on the daily time frame. On the weekly or the monthly, everything is still pointing up, right? And even if we do see a larger move to the downside within this potential descending channel, we're still looking at a pretty good uptrend since we've been, moving up for most of last year. Right? For most of 2023, Bitcoin has been moving straight up. Right? So at this point now, I'm going to be expecting some very, very good correctional moves to the downside. But again, it's not going to be a crash. It's just going to be a textbook correction, just like I've stated for the overall equity markets on the S&P 500. All right, so that is it for this video. If you guys liked what you guys heard and what you guys saw, please make sure to hit that thumbs up down below. It really helps out the channel. But most importantly, if you guys aren't subscribed yet, or if you guys are new here, make sure you guys hit that subscribe button down below and hit that notification bell to know when I have uploaded a new video, or most importantly, when I am live. Right? Good luck, and I'll see you guys tomorrow morning.